Hello everybody, welcome back to the channel. My name is AJ and today we're going to be talking about a 401k and how you can invest into a 401k to save on taxes and possibly even double your investment. So what is a 401k? Well, first of all, it's not 401,000. It references Section 401k of the tax code, which authorizes employer-sponsored retirement accounts. Cool. What does that really mean? You can invest your money into a retirement account pre-tax. So let's say you're in a 25% tax bracket and you want to invest $1,000. Normally your $1,000 would have 25% taken out of it when you get it as income. So you're only going to get $750. But instead, if you take that $1,000 and invest it into the 401k, it goes in as $1,000. You pay $0 in tax on it. But when you take the money out at retirement, you pay tax at that point. You pay tax when you take it out. Now, a 401k does have limits. So as an individual, the most you can put in 1 year is $19,500. If you're over 50, you can put an extra $6,500 to catch up to what your retirement goal might be. Now it gets better because your employer can also contribute to this account. Your contribution plus your employer's contribution together can be a maximum of $57,000. Now these numbers are in 2020. They could change. They actually normally change every single year. But let's do a little math here like we just talked about. If you had a 25% tax bracket and you wanted to invest the maximum of $19,500 in 1 year, normally you would have to pay tax on that $19,500, which equals out to $4,875. So that $19,500 minus tax, you're going to have $14,625. Cool. But if you're investing the full $19,500. So it only costs you technically $14,625 to have a $19,500 investment today. Keep in mind, I did mention you are going to have to pay tax when you take it out. But because your money's invested today, it should grow a lot over the long term before you actually retire. Because this money has to stay in that account till you're 59 and a half. When you're 59 and a half, you can pull the money out and it'll be taxed at whatever your current tax rate is at that time. So ideally, if your tax rate is high now, we're going to hope that it's going to be low when you retire. If you're at 25% now, we're going to hope that when you retire, it's 20%. Then you're going to really save on taxes. You're going to pay a lot less. But there's another thing to keep in mind. Some 401ks have fees. And you're going to need to look at what percentage they charge to manage that 401k account because it could eat into your growth over the years. And it could lower the value of the 401k. But now, even if you're planning on having more income over the years, if you're planning on making more money, and you're planning on being in a much higher tax bracket by the time you retire, which is probably what most of us do, you're going to pay more tax when you take the money out. Here's the best part of a 401k. Employer matching. Most employers will match your investment up to a certain amount. Let's say it's 3%. You invest 3% of your paycheck. That means your employer is going to invest also 3% of your paycheck. So let's give some easy numbers here. If 3% of your paycheck is $500 and your employer says they will match that 3%, that means you invest $500, your employer is also going to put $500. They just gave you $500 for free. Yes, free money. Yes, they double your investment for free. That's what employer matching is. They give you free money. So I always recommend invest the maximum amount up to what your employer will match at least. Because they're giving you free money. This is a way to get a lot of extra money. Now, if they're doubling your investment, even if there's a little bit of a fee on the account, even if your tax bracket's going to be higher when you retire, you're probably going to have a heck of a lot more money in that account when you retire than you would have if you invested by yourself. Free money is free money. Please take free money. We all like free money. And there aren't many systems in this world where you can get free money other than employer matching. 401ks are great for that, and it's an easy way to double your investment instantly. That's just so cool. And of course, you pay no tax now. If you can get out at a lower tax bracket when you're 59 and a half, you save even more on taxes. 401ks really can be great. But let's say your employer doesn't match your income, or they barely match anything, and they may have some fees on the 401k account, and you're really planning on having a much higher income when you retire, so your tax bracket's definitely going to be higher. It's possible that a 401k may not be the best value for you. It may be better to just take your income now, pay your current tax bracket, and invest that money elsewhere. For retirement, it could be a Roth IRA, an individual retirement account. This means you pay tax now, you don't pay income tax on it later. It's better if you have a higher tax bracket later and a lower tax bracket now, and you're not going to get as much benefit out of a 401k. But just remember, investment in a 401k, investment in an IRA, these things are investments for retirement at standard retirement age, which is 59 and a half. So these are not liquid assets. This isn't money I can just pull out and use anytime I want. So it has to be money you're okay with putting away long term until you're 59 and a half. But again, all the benefits I mentioned, employer matching, saving on taxes, you can really make a lot of extra money by the time you're 59 and a half if you're willing to wait until you're 59 and a half to pull that money out. And as with all investments, there's still a little bit of a risk. I know this is a retirement account and they can be very well diversified and they've got a lot of different options of what you can invest in, but it's still an investment. All investments have some risk to them. That's okay. Everything in life's a risk, right? Even you take a new job, you don't know the company's going to be around tomorrow. We don't really know what's going to happen. But if you have the opportunity to invest in a 401k, if your employer is going to match some of that money to give you free money to invest, definitely take advantage of that. Do everything you can to make sure you have all the money you need at retirement for yourself, for your family, and for everyone. Grow your future wealth today and save as much as you can on taxes legally using the systems that we have available to us now. 401k is really a great tool if you know how to use it right, and if your retirement plans are that you're going to have money at that age and you're going to be able to set your tax brackets properly to save as much as possible and make as much as possible at the same time. Now, I hope you liked this video, and if you did, do not forget to smash that thumbs up button. Make him turn blue. The YouTube algorithm really likes blue thumbs up buttons. And subscribe for weekly content coming from this channel. And if you really did gain value from this video, share it with your friends so they can have some value too. And we'll see you next time.